Buckle up, everyone. You are strapped in and ready for Insurance Hour with me, your host, Karl Susman. Informing, educating, and entertaining, one policy at a time. This is Insurance Hour. Hello. This is Insurance Hour. I am your host, Karl Susman. Thank you so much for being here today. We are talking about all things insurance, including the recent wildfires. Our phone lines are open. The number is 559-656-0317. You can call or text that number or send your questions in to questions@insurancehour.com. Today we are going to be talking about not one, not two, not half a dozen, but 10. Yes, one for every finger on both hands. 10 potential new laws that are being looked at and debated up in Sacramento that impact the insurance industry. I know you might be thinking, wait a minute, didn't we just have an entire new slew of regulations go through? Those were regulations that the Department of Insurance put out. These are laws that would impact the insurance industry. However, they're coming from Sacramento. There are 10 of them, literally 10. Some very basic information is currently available, but what I'm going to do is I'm going to go through all 10 of them today for you and let you know at least what it is that each of the regulations is about, who the sponsors are, and some pros and cons of each one. So for those of you that want to be up on what are the pending new laws that are coming down that will impact your insurance policies in the state of California, then you've come to the right place. We're going to go through all 10 of them. Now, some are, I shouldn't even say new, they're all brand new. These are not laws. These are pending laws that are being discussed with the different folks up north. And I'm sure they'll go through many iterations before they get finalized, before they get voted on, and certainly before they even see the light of day as far as becoming a law goes. So let's dive right into the first one. The first one is called the California Safe Homes Act. Now, it is sponsored by Assemblymember Lisa Calderon. The stated purpose is to establish a grant program to provide state tax-free funds for residents to implement wildfire mitigation measures, such as installing fire-rated roofs and creating non-ignition zones around the property. All right? So this is something that's being designed to try and incentivize people by way of a grant to be able to do work to make their homes less likely to burn. Sounds good so far. Let's look at the pros and cons. Some of the pros, this would obviously enhance wildfire resilience for homes and communities. That's a good thing. It would potentially reduce insurance premiums by decreasing wildfire risks. Now, this is a big one. What we're basically saying is, look, we want to pay less for our property insurance. We want to pay less for our fire insurance. In order to do that, we have to lower our risk of there being a fire that burns down our home. Well, there's not much we can do about controlling Mother Nature. So what we can do is we can control the exposure that we have surrounding our home and the exposure that we have of our actual home. So this is trying to incentivize for that. And another pro for this would be that it provides financial assistance to homeowners who are trying to make these upgrades to their home, if you will, to make it less likely to burn, but might not have access to the funds to do it, right? It's always the money. Now, what are some of the negatives, some of the cons to this bill potentially? Well, first of all, it requires allocation of state funds, which will impact the state budget. Well, we know how that tends to go, how sometimes we tend to spend way more than we have, and sometimes we tend to spend a little bit less. Sometimes we happen to have a surplus. It goes all over the place. It depends on the year, it seems like. But that's obviously one of the cons, is that it is going to be dipping into state funds. The next potential problem is that the implementation and distribution of grants could be a major heartache. I mean, let's face it, anytime there's a major government entity of whatever form that's going to be trying to do something, especially giving money out, well, that could sometimes be problematic. Is that fair to say? Also, as you know, some of those bad actors start to come out whenever they see money. So I think there could potentially be a massive amount of fraud if this is not looked at and maintained very carefully. And finally, homeowners may, and again, it depends on how this potential law would come down, but as it stands right now, homeowners may need to cover upfront costs before receiving the grants. And that is a little unclear, but it might mean that some of the work has to be started and then the grant program will reimburse versus potentially all of it might need to be done. Again, it's not clear. The bill is in its infancy, but in general, the idea is that the state is going to provide money to allow people to do things to their home to make it less likely to burn. And because of those things being done, the insurance premium would go down. We would have less fires in general that would impact a large number of homes, and everybody would be happy and live happily ever after, right? Well, that's always the goal, but that's the general stated purpose, okay? Now, let's move on to the next potential law. This one is the Business Insurance Protection Act. Sponsor of this is Senator Sasha Renee Perez and Susan Rubio. The stated purpose being to extend existing residential insurance non-renewal moratoriums to include commercial policies, which offers protections to businesses similar to the protections that exist for homeowners. This basically is saying, look, you're coming up with lots of protections for residents and homeowners. We want the same thing for businesses. Now, this has the potential to stabilize the business insurance market, help maintain economic continuity after a disaster, and encourage insurance companies to continuing offering coverage because they're going to be getting that same level of protection. The negatives could be insurers might decide that they need to increase premium to offset that potential risk. It could lead to legal challenges because, hello, we're in California. And of course, it may require additional regulatory oversight in order to make it actually happen. Again, whenever we're looking at some type of a process that the government is funneling down, or in this case, trying to change the insurance laws, when we have the potential that there's going to be some type of legal upset, or there's going to be some type of mechanics that are going to make it challenging to do, right? We have to talk about giving money out for grants, or we have to talk about making insurance carriers do something that they otherwise would not normally want to do. Yeah, that might not always be the easiest thing in the world. But you know what the easiest thing in the world is? For you to sit there for another 60 seconds. We're going to take our first break. When we come back, we'll get on with the rest of these potential laws that they're looking at up north. This is Insurance Hour. I am Karl Susman. 60 seconds is all. Stand by, and we will be right back. Let's talk about earthquakes for a minute. Look, we know we live in earthquake country here in California. Powerful, devastating earthquakes have happened here before, and science says that they will happen again. They can't tell us exactly when. They can just tell us that it is going to happen. Count on it. Prepare for it. Did you know that earthquakes are not covered by your homeowner's insurance policy? You need a separate policy to give you the peace of mind that you will be able to recover without getting financially wiped out the next time we get hit with a big one. There is a great company here in California that will provide you with earthquake coverage you need at a price you can afford. That company is GeoVera. I have a policy through GeoVera. I really like how easy it is to choose from all of their great coverage options, backed by the financial strength that lets me know that they will be here for me when I need them the most. Go to getquake.com/insurance hour to learn more. That's getquake.com/insurance hour. Make sure you're ready for the day when the ground shakes again. Hello. This is Insurance Hour. I am your host, Karl Susman. Thank you so much for being here today. The phone lines are not open because we are going through, are you ready? 10 new potential laws that the good people of Sacramento are discussing. And we need to know about them so we can get involved if we like them, don't like them, want changes to them, or whatever the case may be. Meanwhile, don't forget you can still call our phone number or text it with your questions regarding insurance. That number is 559-656-0317, or send your questions in to questions@insurancehour.com. I also want to thank our good friends over at GeoVera Insurance Company. GeoVera is the place to get your earthquake insurance quotes and policies and have protection. I've actually had GeoVera on my home for several decades, and as you can imagine, I could probably get my earthquake insurance from any company that I want to. As a matter of fact, they all want me to have the earthquake insurance. Everyone wants me to have their insurance policy, right? They want me to be able to say, well, I have my policy there because, of course, I'm the expert, right? So I should know best. Well, I have had my policy with GeoVera for a very long time. Very competitive rates, very, very customizable policies. They're good people. That's just the bottom line. These are good people and a good company. So if you're looking to get a quote for earthquake insurance, and if you're in California, you certainly should. Just go to insurancehour.com and you'll see the sponsor for GeoVera. Click on it. Takes maybe 30 seconds to get a quote. GeoVera, we thank you for your support of Insurance Hour. All right, back to the fun. You ready? We talked about the first two potential laws that are being discussed that would impact the insurance marketplace. And now we're going to talk about the next one. Are you ready? It is the Insurance Premium Protector. That's sounds like a very dramatic name, isn't it? Sponsored by Assemblymember John, I'm going to mess up the name, John Harabedian. And the purpose is to cap public adjuster fees at 15% and prohibit additional awards outside of the contract to ensure that wildfire survivors receive the maximum funds on their insurance claims. All right, this might need a little explanation. If people decide, for one reason or another, that they are not getting satisfaction with their insurance claim, they have the ability to sign away a portion of their recovery to a public adjuster. Now, what we're finding is that a lot of public adjusters, because as you can imagine with the wildfires in Southern California, are very busy. And when they're busy and they're in demand, they also have the ability to command potentially a larger percentage because they are in demand and there are only so many of them. So what this law potentially is set up to do is protect consumers from having to sign away more than 15% of what their actual agreement is with the insurance company, because that's normally how public adjusters work. They will get a percentage of the settlement from the insurance company. And this language also specifically calls out the practice for getting fees outside of that percentage. So it needs to be all and encompassing. So let's look at some pros and cons. Pros would say that it protects consumers from excessive fees during vulnerable times. Well, that is likely why we are seeing this right now, because people are very vulnerable. They're eager to get back their homes. They're eager to get money to be able to start building, to be able to buy things. And unfortunately, at the same time, the insurance industry is slammed because of all of the claims, and they are moving along. Some would say at a good pace, some would say otherwise. And at the end of the day, some people have to decide what they want to do. Do they want to work with the claims adjuster and the insurance company and potentially their insurance agent or broker, or do they want to try and have somebody else come in to try and expedite for them at a cost? And again, this is just to try and keep that from becoming a little bit overutilized, maybe, or at least to protect consumers from paying more than at least the regulators think they should be. Another pro is that it ensures more insurance funds are available for rebuilding. Well, if less money is going to the actual independent adjuster, then the thinking is more money goes to the rebuilding, which is kind of the point of the insurance policy to begin with. Finally, stated purpose to promote transparency and fairness in the claims process. This is a big one because a lot of times, again, when things like this are going on, when there are major disasters like this, people are a little more quick to sign, right? Without realizing what they're signing away or what it's going to cost them. They just want help. They want guidance. So this is going to make that a little more transparent by being a little more specific with how independent adjuster contracts are written, what they can charge and what they can't charge. Some disadvantages: this may discourage certain public adjusters from taking on complex claims because, again, they are independent. They can charge what they want, well, as of now. But this regulation would basically clamp down on what they are able to charge. Now, an adjuster might say, you know what? This is a massive case. This is very complicated. I can't do it for 15%. And I am not one to like being in a position where any type of regulation does anything to get its fingers involved in the way competition works. Now, independent adjusters are a competitive business. They can charge what they want and people can hire them or not. Or in this case, they can negotiate with them. A policyholder could say, you know what, I only want to pay you 10%. I don't want to pay you 15 or the 20 that you're asking, whatever the case might be. But this regulation specifically is designed to cap that amount of money. Also, there is the potential for some pushback from people that are in the public adjusting industry, because again, who likes to have what they charge capped, right? It's sort of a bizarre thing. I understand it, and I definitely think that there is a need at times to have protections for consumers. But at the same time, if you arbitrarily slap price maximums or any type of thing like that on an industry, it tends to backfire over time. I mean, I'm looking at the insurance industry, and there are times when insurance companies are basically and remember, they're private companies. These are not state-run organizations or anything like that. And they're just arbitrarily told what they can or can't charge, whether it makes sense or not, whether it's based on profitability or not, whether it's feasible to charge that rate or not. I always use the example. Can you imagine if somebody went to, let's just say Toyota, and said, "Hey, Toyota, we think you should charge $30,000 for your best top of the line Camry." Yeah, I get it. It might cost you more money than that. We think $30,000 is a good number. And they pass a law and it just has to be that way. You would look at that and say, huh? But in essence, that's what some types of regulations do. They simply put an arbitrary cap on what an industry or an individual or a company is charging. Yeah, I'm not a super fan of that. Now, again, I understand the rationale. I understand that there is a necessity at times to kind of rein in some aggressive sales tactics if that's the issue. But a blanket cap on costs, not really a fan about that. But I'd love to hear what you have to say. Give us a call if you want. Leave us a message at 559-656-0317 or send your comment in to questions@insurancehour.com. Time for another quick break, and when we're back, we're going to go over more of these potential laws. Stand by.
Ladies and gentlemen, boys and girls, in just a few moments, the Window to the Magic podcast show will begin.
My name is Patrick.
My name is Calvin.
I'm Mouseketeer Gray.
My name is Paul, and I will be your guide through the wonderful world of Disney sound experiences.
This show is a weekly trip into the world of the Disney theme parks and resorts.
And this is the place where you get to use your ears to surround yourself with the magic.
For your safety, please remain seated while listening to the windowtothemagic.com podcast.
Maybe there's a name for this, something like Disnotic obsession. Please visit windowtothemagic.com for more information, or you can find us on Apple Podcasts and in the iHeartMedia app.
Hello. This is Insurance Hour. I am your host, Karl Susman. Thank you so much for being here today. We are talking about all things insurance, and in this particular show, we are talking about 10, count them, 1, 2, 3, 4, 5, 6, I sound like the count. Count them, 10 new laws. 10 laws that are being discussed right now that will impact the insurance industry. Our phone lines are not open live, but you can still give us a call, give us your feedback. That number is 559-656-0317, or send your questions or comments in to questions@insurancehour.com. And if you don't know what that reference was to, that was the count from Sesame Street, and you are clearly too young to be listening to anything other than Sesame Street. Okay, let's go. The next law that they're talking about, this is called the Eliminate the List Act. That doesn't sound too ominous, does it? Okay, the sponsor is Senator Ben Allen. The purpose is to require insurance companies to pay wildfire survivors 100% of their contents coverage without the necessity of a detailed inventory list. And it grants consumers 6 months to provide proof of the loss proof of loss following a state of emergency. Little bit of color on this for you. Insurance policies, as you know, they're just contracts. And in the contract, it says that when there's a loss, you have to provide certain information to the insurance company. And that's the way it works. Now, when we have large-scale disasters like this, all of a sudden, people like to try and backpedal and change what the contracts say. That is what the contracts say right now. What this is looking to do is expand on what the Department of Insurance has already begun. The Department of Insurance has put out bulletins that say, hey, look, we understand that the contract says you have to give us a list. We don't want that. We just want you to pay 100% of what the limit was for personal property, period. Mic drop. Boom. Again, don't like changing the rules after the fact, but that's what the department has done, and they have asked carriers to do it, and carriers are stepping up and doing that. What this potential legislation would do is it would make it the law. It would basically say that, hey, look, when there's again, if we look at the wording, it looks like it's targeting specifically wildfire losses, and that would mean that they immediately get 100% of the listed contents amount on their policy. My first question, of course, is, well, if we think that's important to do, then why are we only doing it when it's a wildfire? What about a kitchen fire? What about any other type of a fire? I don't know. I guess wildfire on the brain, that's what everyone wants to be talking about, right? So that's my first question. The next question I have in concern, well, actually, you know what? Let me get into the pros and cons, and then I can dissect it with you a little bit more, because I think it's an important one, because we're already dealing with it to some extent based on the bulletins from the Department of Insurance. So some of the pros say that they would simplify and expedite the claims process for disaster victims. No question about that. They also say that it would reduce the emotional and administrative burden during recovery. There is definitely an emotional savings there, because I've talked to clients, they've just lost everything. Their house is gone. Everything inside is gone. And to be told they have to turn around and make a list of everything that was there, yeah, that's a little bit tough. It's an emotional, nightmare to have to do. And telling them that, well, go look at pictures and videos, it'll help you remember what was there. That doesn't really make it feel any better. That might actually be making it feel worse. So there's no question that it is an emotional burden. Finally, they're saying that it would provide flexibility and time for policyholders to document losses. Well, 6 months is a long time for you to not know if your house is a total loss or not, but that's what's written. Now, let's talk about some of the potential shortcomings. One, insurance companies might face challenges in verifying claims, all right? Now, you're supposed to just get back what you have, right? You're not supposed to be in a better position after a loss than before. The concept of indemnity is to put you back to where you were before, right? So if you have a policy and the policy says, well, we need to be sure you have these items and then you'll get reimbursed for them or you'll get paid for them, that makes sense. If we're just arbitrarily saying, well, if the policy limit is that, you get the limit, even though you might not have had it, well, that could potentially be a problem. There's something called a moral hazard where, well, if you're better off after a loss, are you going to do whatever you can to prevent the loss or not? Could be a problem. There's also the potential for there to be an increase in fraudulent claims. Simple, right? If people think that, boom, if there's this type of a loss, they're going to get the limits on their policy the next day, period, end of story, they're going to probably look to carry larger limits than they actually need. And guess what? If that's the case, the insurance carriers are going to end up, it might not happen overnight, but it'll happen eventually, having to balance out what they're charging for that coverage to reflect the fact that it's no longer being verified. It's just an absolute, here's the money, goodbye, have a nice day. Because that's not the way the contracts currently read. That's not the way the contracts currently are priced. So a bit of a double-edged sword there, right? Kind of be careful what you wish for. If we end up getting that, then it's possible that the rates will begin to reflect that additional exposure. All right, let's go on to the next one. The California Community Fire Hardening Commission Act. Whew, that's a long one. Sponsored by Senator Susan Rubio, Dave Cortez, and Harry Stern. The stated purpose, the creation of an independent statewide commission within the Department of Insurance to develop an effective inspection system enabling individuals to receive insurance discounts for home hardening and improving wildfire safety in communities. Some of the pros, they claim, to encourage community-wide adoption of fire-resisting measures, potentially lower premiums for compliant homeowners, and promote standardization and safety practices. Well, yes, those things could all potentially happen. This was a little bit challenging on the cons. Establishing and operating a commission requires funding and resources. Also, homeowners may incur costs based on those standards. And finally, the implementation could potentially be a regulatory nightmare because now you're going to have non-insurance people, right? Non-wildfire specialists, just people, elected officials that basically are going to say, well, we think if you do X, Y, and Z, it will make your home less likely to burn. And by the way, insurance companies give a discount for that, even though it might not be actuarially sound, even though it might not actually lead to a less likely fire event. So I think this one might have some tweaking that definitely needs to happen to be able to ensure that if we're going to be going out there and marching around saying, if you do X, Y, and Z, number one, you're going to make your house less likely to burn. And number two, we're going to force a private company to offer you a discount for it. I think we've got some potential problems in there. I don't understand why we tend to feel like we have to force things to happen when the free market will make things happen anyway. I digress. Speaking of digress, you know what that means. It's time for another 60-second break for me to have a sip of coffee, and then we will be back. We've got more laws to talk about. This is Insurance Hour. I am Karl Susman. Thank you for being here. Stand by. We will be right back.
Have you been dropped by your insurance agency or seen your premiums skyrocket? Susman Insurance is here to help. We're a family-owned and operated insurance agency that's been serving our community for 2 generations. At Susman Insurance, we know how stressful it can be to find the right coverage, especially when prices go up or you're left without insurance. That's why we're committed to finding you competitive rates, whether it's for fire, home, earthquake, flood, auto insurance, you name it. We've got you covered. Give us a call or send a text to 310-820-5200 or visit us online at sussmaninsurance.com. Plus, stay updated on all things insurance by joining our text group. Just text 567-4CARL with a K. That's 567-367-5275 to get the latest updates straight to your phone. Susman Insurance, your family's insurance solution.
Hello. This is Insurance Hour. I am your host, Karl Susman. Thank you so much for being here today. The phone lines are closed, but they still want you to call and text and give us your questions about insurance and comments about these new laws that we are talking about today that will be coming to a Sacramento office near you. That phone number is 559-656-0317. Call or text or send your email to questions@insurancehour.com. Today we are going over 10 potential new laws that are on the books to be discussed up in Sacramento by our elected illustrious people to see about helping us in our insurance industry. Number 6 on the list is called the Deceptive Disaster Relief Advertising Act. Whew! Say that 10 times fast. Sponsored by Assemblymember Health Flora. And it is the idea behind it is to mandate that advertisements for disaster recovery services clearly display the statement, "This is a solicitation for business, not affiliated with any government entity or nonprofit, to protect consumers from misleading advertising following natural disasters." Let me give you the pros and cons, and I'll give you some real life stuff with this. Some pros, of course, enhancing transparency in disaster-related services in advertising. Good thing, I think. Protects vulnerable consumers from potential scams. Definitely. And promote ethical business practices in the aftermath of disasters. Yes. Again, why don't we just have ethical people in business? I don't know. Cons, businesses may incur additional costs to update advertising material. Meh. Enforcement of compliance may require additional regulatory resources. It's a possibility. And could lead to legal challenges regarding advertising regulations. You know, again, I started saying earlier today that I don't like when we force private companies and industries to do things, and I do not. And then you have a regulation like this, and you say, yeah, but this is kind of cool, isn't it? Because what harm is there in having them just add this language? Well, people are getting scammed out there. There's no question about it. There is a need to be able to change the way in which people go after people after large disasters like this. I've seen it too many times. I've seen the tricksters out there, the fraud, and the scammers that are out in droves taking advantage of people that have been affected by the wildfires. I wish it wasn't, but it was. I don't know if simply adding language to an advertisement is necessarily going to solve the problem. I think it wouldn't hurt potentially. But again, I don't understand exactly why we think that by simply notifying someone of what it is that they are getting or what it is that they're signing up for, the industry is going to do that anyway, right? I mean, if somebody is signing up for something, but they might not sign up if when they first saw the ad, there was special language. I don't know. I really could argue this both ways because I like the idea of the consumer protection. I don't like the idea of forcing language onto a private business and a private industry. Of course, then you say, well, what do you think about the cancer warning on cigarettes? That certainly was not done voluntarily. Don't get me started. All right, you ready for the next one? Let's do the next one. Number 7, the California Wildfire Public Model Act. The sponsor is Senator Dave Cortez. The purpose to establish the nation's first public catastrophic model for wildfires, providing a crucial tool to assist in wildfire planning, planning and transparency. Now, the advantages to this is to potentially improve the accuracy in assessing wildfire risks. Here is the problem, the cons. The cons of this, again, is we're in a situation where we're having the elected officials come up with insurance type of actuarial figures. We're basically asking our elected officials to all of a sudden become scientists and actuaries and mathematicians and climatologists. Is that a word? Did I just create a word? Let me know if that's actually a word. I hope it is. It sounds like a word. But we're basically turning around and we're trying to create something with potentially the wrong parts. I don't have a problem in concept with there being a public model for wildfires. However, that should not be, and this is the slippery slope, that should not mean that an insurance company, again, private company, has to turn around and use that model. Why would I do that? If I'm an insurance company and I spend all of this money to have all of our people run models and do all these things, and then I'm told, well, you can't really use any of that research that you've done. You have to just use our research and go with that. I don't see how that's going to really end well for anybody involved, especially because historically, public models of things don't tend to work out to be the most accurate. And again, I don't want to get into this. I'm not looking to bash, any particular utility, but let's face it, sometimes private industry will do better than the government at doing certain things. Certain things, yes, just certain things. But when we're talking about creating something that would impact the entire insurance industry in the state of California, mind you, this is for a reason. It would be if this law went into effect the way it's written. It's even stated the first in the nation of a catastrophic model. Well, the first in the nation tells you that none exist now, which might tell you something right away, that maybe there's a reason we have not done this before, right? Maybe this is not a way to try and fine-tune our risk exposures in the state. This is not really the best way to figure out what's the likelihood of there being a loss or not. You follow me? So I'm always a little bit concerned, and there's 2 laws now that tend to do this, where the government wants to say, hey, we can figure this out. We're going to come up with the right numbers. We're going to come up with the right language. And then every private company that wants to play in that sandbox, they have to follow our rules. I had a problem with that just at its inception. So could this be better? Well, if industry experts were brought in for this, and as the most important point, as long as it becomes something as a more of a barometer to measure against other models. It doesn't become the only model you can use. It doesn't become the de facto standard model that all private insurance companies have to go by. Because again, you would not want to do that if you were an insurance company. I wouldn't want to do that if I was an insurance company. I would want to rely on my people. I would not want to rely on your people. Don't forget, carriers have to decide if they're going to take a risk or not, whether they're going to write a policy or not. And they look at all sorts of things to make that decision. They do not want to be forced to look at information that they did not gather themselves, right? Makes sense, and the cynic in me says, well, that's because they want to be more conservative. Well, If that's what they want to do, they're going to write less business. Competition will pick up. Other companies will write that business. So no harm, no foul. Speaking of harms and fouls, we've got another break, and then we are back with our next two laws to look at. Insurance Hour with Karl Susman. That's me. Stand by.
Ladies and gentlemen, boys and girls, in just a few moments, the Window to the Magic podcast show will begin.
My name is Patrick.
My name is Calvin.
I'm Mouseketeer Gray.
My name is Paul, and I will be your guide through the wonderful world of Disney sound experiences.
This show is a weekly trip into the world of the Disney theme parks and resorts.
And this is the place where you get to use your ears to surround yourself with the magic.
For your safety, please remain seated while listening to the windowtothemagic.com podcast.
Maybe there's a name for this, something like Disnotic obsession. Please visit windowtothemagic.com for more information, or you can find us on Apple Podcasts and in the iHeart Media app.
Hello. This is Insurance Hour. I am your host, Karl Susman. Thank you so much for being here today. We are talking about potential new laws that our people in Sacramento are discussing that we all need to know about so we can get involved and have our say. Meanwhile, the phone lines are not open, but they would definitely love to get your calls and questions anyway. That number is 559-656-0317. You can call or text that number, or send your questions in to questions@insurancehour.com. Before I go on, I want to make one quick point. My goal with this program is to help educate people about how insurance works. But I'm only human. I know it's shocking, but it's true. I'm only human, and I might not always get it right. So if you hear something and it just does not sit well with you, you're like, yeah, I've just heard otherwise, or that just does not seem to make sense to me, then I want you to do the right thing. I want you to shoot me an email, give me a call, and let me know. This is not about my ego. This is about me trying to get the right information from me to you. And if it's not from me, from somewhere to you. The right information, the most updated information is always the goal. So if you hear something and it doesn't seem right, let me know. I will always do the best that I can, but I can't always get it perfectly spot on. So again, let me know.